Good morning, good afternoon, good evening, wherever you are. I'm your host, FD for Search5.tv, and in this latest video, we want to analyze why the sell in May and go away narrative dissolved. It didn't work, and if you sold in May, you may actually be having a panic attack right now if you are still watching the market. But if you went on holiday, you'll probably come back and you'll have the nightmare of your life when the bull run possibly will be going or reaching its top. But before I jump into this analysis of why the sell in May and go away narrative collapsed this time around, please note that I am not a financial advisor. I'm just some dude on the internet interested in anything crypto, and we dive deep into areas where most people don't want to go or want to unpick. So all those experts who kept on telling you about sell in May and go away, where are they now? That's what we want to find out. Did they actually sell or they stayed around? So keep watching. But before we proceed, guys, do your own research, and this content is also not intended for UK audiences for obvious reasons. The authorities are trying to protect you just in case you end up losing your funds. That said, let's come back to sell in May and go away. Why did it collapse? Well, when baking a cake, don't leave it just as it's rising. I'm sure that's common sense. Investors love cozy aphorisms. Sell in May feels safer, like predictable summer heat. But in crypto, that's more like an artisan sofu. Timing is crucial, and the cold rules can fall flat when inflation is in and seasonality is going up and ETF mania is coming in. Let's break down why this year's summer may have been hotter than usual and what that means or how this cycle may end. Are you ready for a crypto weather report? That's what we are jumping in now. Oh, let's look at the traditional narrative first. Sell in May in stocks and in crypto. This phrase originates from UK stockholders where they sell in May, return around September, which is around the St. Ledger Day. Historically, crypto also showed weakness from June to September, with the average BTC returns of between 1.3% compared to 11% in November to April. Why sell in May collapsed this time around? Well, look at the historical ETF inflows and macro tailwinds first. You can't ignore those. May of this year in 2025 saw a record ETF inflows, especially from BlackRock's IB, fueling bullish sentiment and price action into summer. So if you're not watching ETF inflows, you're probably sold, and now you're on the sideline. You'll be joining the race higher pricing. We also had a rising M2 money supply, which correlated with crypto growth, making May more of a springboard than a soft landing. Next, you got halving driven cycles overriding seasonality. 2025 came post halving, the Bitcoin halving, that is, a phase historically linked to strong post halving rallies, often ignoring seasonal patterns. So if we're not watching and aligning the Bitcoin halving with where we are this year in 2025, then you probably lost out because your views are biased, or they're old school, or your views are not dynamic enough. Next, let's look at crypto decoupling from equities. While equities historically exhibit summer doldrums, crypto's unique dynamics and decoupling from traditional markets, especially amid artificial intelligence and crypto narrative, which meant crypto ignored equity seasonality. That could be possible, but I think that is also extending into conventional equities. Next, you got behavior overbite, which is former Fed rallies. Retail and institutional buyers stepped in aggressively in May, not slowing down. Positive sentiment became self-reinforcing, backing any seasonal lull. So I think most people actually jumped in May thinking those who wanted to sell in May are already gone, and most people aped in. So it was almost like no one sold, most people aped in. So for the few that were sidelined, you will probably remain sidelined until the next cycle. This is our path to the top of this current cycle, that is. So how does this point to where this bull run cycle ends, or how it might end? Well, you got some warning signals here. You got the technical fatigue. Analysts spotted potential death crosses or signs of weakening momentum by late spring. Volume and liquidity starts thinning. If liquidity fades in summer, wash trading and volatility manipulation can spike in low volume periods. Next, you got macro shocks or policy shifts where global tariffs, Fed or regulatory moves could reassert dominance, unsettling hyper bull sentiment. So that could be a warning sign to watch out for as well. And possible scenarios include extended markup, where strong institutional and ETF flows propel summer into an even higher peak, delaying any correction. We are having some not so extraordinary corrections. Those are standard corrections we're experiencing at the moment, and they're not that much pronounced anyway. The next scenario could be a situation where prices stabilize, altcoins outperform Bitcoin briefly, broader correction begins in early autumn, as well as sharp corrections, which happens once liquidity thins and macro uncertainty rises, where we could experience rapid retracements, Bitcoin down 20 to 30%, altcoins, you know the drill, Armageddon, they drop sharper, which marks an end the bull phase. That could also come into play. So what does history tell us then? Oh, historical crypto data shows sell in May underperformed buy and hold over 2013 to 2024. Holding through summer doubled cumulative returns versus only holding November November to April. Head behaviors and volatility patterns often disrupt seasonality as crypto remains young and sentiment-driven. And my final thoughts, I'll go back to my cake that I started baking at the top of this video. Which cake wins? Old recipe or new flavors? Well, who wins in 2025 depends on those who are flexible enough to ignore dusty rules and follow real-time signals, ETF inflows, volume trends, technical markers, macro shifts. What did we learn from this collapse of sell in May and go away narrative? Well, crypto doesn't follow stock market cookbooks. When institutional capital surges and halving cycles hit full stride, traditional seasonality can crumble and outperforming the rulebook becomes the new rule. We are rewriting the rules. So don't sell in May just because the saying rhymes. Watch the data, not the calendar. Let us know your thoughts about this sell in May and go away narrative, how it collapsed and what your thoughts are. What could have contributed to that? We've shared our cake in this video. Now you show us or share with us your recipe and tell us how your cake ends in terms of taste. Until the next one, guys, FD for SageFact.tv signing out for now. Bye.